A new study shows the salaries of employees are projected to increase next year because of inflation and the tight labor market. Joining us now is Patrick Marquina, Work and Rewards Director of Willis Towers Watson, Philippines. Patrick, thank you so much for joining us. We just heard the economy is strong despite rising prices and a weak peso. What are the fundamentals saying about the current labor market situation?
Okay, if I may comment on the GDP, Rico, it's a good indication that the outlook for the business is looking good, and somehow it influences decisions of organizations, especially when it comes to investment in rewards for people. And that would mean more employment, more opportunities for the Filipinos.
And it also reveals that the unemployment rate last month was at a low and there are less Filipinos out of work. But what is the current situation right now in the labor market, Patrick?
Yeah, there's really a tight labor market nowadays, especially in growing industries where we have more job openings compared to availability of skilled talents. And with this growing demand for work and for new skills, we find opportunities, or we'll probably be looking at better opportunities for our potential employees in the market. So we would expect inflation, the unemployment to further improve in terms of the percentage compared to what was already reported now.
So, Patrick, where are the job openings right now? In which particular sectors and industries?
Okay. Number one would be fintech, financial technology, where we see a lot of startup organizations and new entrants. There are new roles, new skills required. Also, the BPO shared services will continue to grow in terms of the number of jobs openings, given that a lot of the companies globally would also look at opportunities to outsource for cost efficiency.
But of course, we've seen soaring inflation rates, particularly in the previous month. It was at 7.7%, jumping from 6.9%, Patrick. Are these concerns making employers concerned and making them raise the salaries of their employees because they want to retain these employees within their organizations?
Okay. Historical data will show that there's really no direct correlation between salary increase and inflation in the Philippines. Although for 2022, based on our study, roughly a third of the survey participants in a study that we conducted early this year adjusted their salary budgets due to inflation. But I don't think it's going to move at the same pace. Salary increases won't move at the same pace as inflation. So if we're looking roughly at 5.7% for 2023, even if inflation reaches 7%, I don't think salary increase will be more than 5.7 to 6%. Mainly because the factors being considered in salary increases goes beyond just the inflation. Greater weight is given to talent supply and demand, which is driven by demographic trends and technological advancement.
If I get a 6% salary increase, I will take that, Patrick. In which particular levels? At which particular levels, job levels, are employers raising pay packets?
Normally, that budget will cover all employee categories, from the most junior business support up to the leadership level, executives, but distributed based on certain parameters such as performance as well as merit.
But on the flip side, Patrick, we are now seeing in the United States the likes of Meta, Twitter, laying off thousands of employees due to slower growth. Why isn't this the case for our companies here in the Philippines?
A lot of factors, Rico, no? But first of all, with the new the changes in work nowadays, a lot of the companies globally would tend to look for opportunities for cost-efficient way of delivering work. And outsourcing is at the forefront of that. And the Philippines is one of the prime destination for outsourcing. And that's why even during the pandemic, we've seen the growth of opportunities in that industry. We're also seeing a lot of these organizations, and even if you look at during the last recession, we're always somehow 2 years or a year behind with what's happening globally. Definitely, it might have impact in terms of salary increase projections, but not immediate on the jobs.
All right, not immediately, particularly for the local companies. What about the multinationals? Are they also looking right now for cost efficiencies? Are they starting to feel the pinch because of the weakness of the peso against the US dollar and other currencies?
In terms of weakness of the peso, there might be an impact in terms of budget investments for next year, because resources of organizations are also affected. So we might, in relation to your question a while ago, in terms of salary increase, that's the reason why I don't think it's going to move at the same pace as the inflation rate, because organizations' resources are also affected. In terms of employment, right now we don't anticipate that there's going to be much impact at this point.
Patrick, thank you so much for your insights and for joining us in the final word. Patrick Marquina, Work and Rewards Director of Willis Towers Watson, Philippines.